Hey everyone, welcome back to Corporate Decoder, the place where we always find a hidden truth in those dry corporate filings. Today, we are diving deep into Enertopia Corporation's latest financial report, a 10Q filing that dropped recently, and let me tell you, there are some eye-opening numbers in here. So buckle up, because we are about to decode what really matters. And hey, before we dive into the nitty-gritty, if you love getting these simplified insights directly from official documents, do us a favor and hit that subscribe button. Also, we have a fantastic community over on Discord with a link in the description below where we discuss these filings and much more. Pop in and say hi. So, Enertopia Corporation, they've just filed their quarterly report for the period ending the 30th of November, 2025. Think of this as a mid-year checkup for the company, showing us how they've been doing over the last 3 months. Now, you'll see a few labels for companies like large accelerated filer, and so on. Enertopia is labeling itself as a non-accelerated filer and a smaller reporting company. This generally means they are on the smaller side, which often comes with its own set of challenges and opportunities. Let's peek at the big picture, the balance sheet, as of the 30th of November. 2025, Enertopia has total assets of about $66,708. Now, that might sound small, but what's really important is how this compares to their liabilities. And here is where things get interesting. Their total liabilities and stockholders' equity, which shows the company's overall financial health, stands at roughly $66,708 too. But if you look closely, the stockholders' equity part is actually a deficit. This means that if you were to add up all the company's assets and then subtract all its debts, you'd end up with a negative number for the owner's stake. Specifically, their equity deficit is around $274,370. This is a signal that the company owes more than it owns right now. This deficit comes from a cumulative loss, or deficit of over $16 million. That's a really big number for a company with only about $66,000 in total assets. It highlights the long road ahead for them to become profitable. Looking at the operational results for the 3 months ending the 30th of November, 2025, Enertopia reported a net loss of $74,770. This is less of a loss than the $83,130 they lost in the same period a year earlier, in November 2024. So, while they are still losing money, they are losing it a bit slower. That's a small silver lining. Now, cash is king, right? At the end of this period, Enertopia had about $18,284 in cash. This is a significant drop from the $74,740 they had at the beginning of this reporting period in August 2025. This drop in cash makes sense when you look at their operating activities. They used $56,456 in cash just to keep the lights on for the quarter. That's money spent on running the business without generating enough income to cover it. This is a recurring theme, and it's something investors always watch closely. Let's talk about assets. They list their mineral property, specifically the West Tonopah claims, valued at $10,500. This is a consistent value from the prior period, suggesting no new investment or changes in its book value. They also mention expensing around $8,500 for storage and travel related to this property during the quarter. It suggests ongoing, albeit modest, activity in their mineral exploration efforts. On the technology front, they are working on things like hydrogen technology and an energy management system. They've even secured some patents, which is positive. For example, they received notice of patent number 12,224,704 and patent number 12,231,085 being issued in February 2025. They also filed a provisional patent for a hydrogen production system in April 2025. In terms of expenses, they spent about $9,750 on research and development for clean technologies during this quarter. This is notably less than the almost $23,000 they spent in the same period a year ago, indicating a potential scaling back or shift in R&D focus. One area that always needs a closer look is related party transactions. As of the 30th of November 2025, Enertopia owed about $31,204 to the company's president. They also incurred consulting fees of $7,500 paid to the chief financial officer. These are not necessarily red flags, but it's important to see how the company is managing these internal transactions. Going back to the equity, it is a story of a growing deficit. For context, back on the 31st of August 2024, their total stockholders' equity was a deficit of about $26,597. Then, by the 30th of November 2024, that deficit had grown to $56,533. Fast forward to the 30th of November 2025, and that deficit has ballooned to a staggering $274,370. This trend clearly shows that the company is consistently losing money and its equity is eroding. It's interesting to note that during the period ending May 31, 2025, they did issue shares for cash, bringing in $73,084. They also had a warrant exercise for $50,000, and another issuance of stock for cash that brought in over $100,000. They also recorded stock-based compensation expenses of $54,751. These are all ways the company is raising capital, but it also means existing shareholders' ownership is being diluted. Now, let's talk about what keeps financial officers up at night, the going concern. The report explicitly states that the company has incurred cumulative losses and has negative cash flow from operations, which raises substantial doubt about its ability to continue as a going concern. This is a serious statement. They say they have been able to finance operations through equity and cash on hand, but there is no guarantee this will continue. They are essentially saying we might not be here in the future if we don't get more money. This doubt is further echoed in their risk factors section. They admit their common shares are speculative, that they have no operating history, and their business model is evolving. They are heavily reliant on obtaining adequate financing. They also highlight the uncertain demand for mineral resources and the potential for conflicts of interest with their directors and officers. This is a direct warning to investors. They are essentially saying, invest in us at your own risk, because you could lose everything. They are very upfront about the startup nature of their operations and the lack of proven success. An interesting point for those interested in corporate governance is that their bylaws do not have anti-takeover provisions. This means if someone wanted to buy out the company, there are fewer internal barriers to prevent that from happening. So what's the story here? Enertopia is a company in the very early stages of exploration and technology development. They have some interesting patents in the green tech space and mineral claims, but their financial reality paints a picture of a company burning through cash with a significant and growing deficit. The going concern warning is the most prominent piece of information here. It signals that the company's future is uncertain without significant external investment. While they are generating some intellectual property and exploring resources, the path to profitability is long and fraught with risk, as they themselves openly admit. In Warren Buffett's style, you'd look for companies with solid earnings, a clear competitive advantage, and a sustainable business model. Based on this report, Enertopia is still a long way from ticking most of those boxes. The lack of revenue and significant accumulated losses mean that any investment would be highly speculative. Alright, that's our decoded look at Enertopia Corporation's latest SEC filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps. And of course, subscribe for more deep dives like this every week. And for those who want to chat about this report or ask questions, come join our community on Discord. The link is in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.